G'day guys, Brad Flynn here, and we're talking cash flow forecast. What the hell is it and why do you need it? In this video, I'm going to show you exactly what it is and how important it is in your business. So let's have a look. First of all, you'll notice I've got this beautiful sleeping emoticon over here because you know what? When you have a good cash flow forecast and you can see for a period of time down next couple of months that you can afford to pay your bills, you're going to sleep a lot better. So that's one of the main reasons we do it. Let's go back to our bathtub. Money coming in, money going out, money comes in through the tap with sales, goes out with our expenses, and we want to make sure we've got the happy man up here with a big high bathtub level. So how do we do this? Now here's the thing. A cash flow forecast is a bit like looking into a crystal ball. It's your best guess at how you think the cash is going to flow. So where do we get a basis to start? First thing you want to do is go to your accounting software and print out something called your cash statement. Now, if you've watched some of my other videos, it talks about the cash statement, shows how cash actually flows. It's one of the most unknown about reports of the three statements that we talk about in business: profit and loss, balance sheet, and cash statement. Now, what I want you to do is for the last, say, 12 months, you're going to run this report. In the options, you want it to do month by month, okay? So you should be able to run a report that gives you January, February, March, April, depending on where we are now. Like, so as I shoot this video, we are in November. So you would do from last month, October, for the previous 12 months and run that report on a month by month basis, because we want to see what your cash flow already did for the last 12 months. And you're going to see it's got a fairly simple structure. You're going to see it's got income, which is when cash came into your bank accounts. It's got operating expenses, or expenses where money went out. It works out what the difference is. So if I had 10 in income and I had 5 in expenses, it's going to see 10 minus 5. And then my bank balance is going to be whatever it was before I started this month. So if I had $5 in my bank account the previous month, I've got a surplus of 5. I'm going to add 5 and 5, and it's going to say 10. And that's how it works. So to forecast, what we need to be able to do is go from now and have our best guess looking to the future. So if we've got some historical evidence here, we can see roughly what it's going to look like. So when we do our forecast, you can do this on a bit of paper or in a spreadsheet, or ask your accountant to do it. We're going to go, okay, what's our best guess for next month in terms of the income, not the profit and loss? Forget your profit and loss completely on this one. What income we think is going to hit our bank account for the next 1, 2, 3 months in advance. And this is a guess, okay? There is no set rule for this one. This is your best guess, remember? Crystal ball, best guess. But we're going to look at it regularly so we can update it and make sure that we're keeping on track of it. What expenses do we think we're going to have? Then we know we're going to have income minus expenses in this column here, and our bank balance, whatever it was here, and then subtract that from here, add that to there. So that way you can see in advance, and this is it. Forget profit and loss. Okay, it's got nothing to do with that. Your profit and loss tells you how effectively you're running your business. This is our best guess going forwards. So hopefully that's been of help for you. Getting your bathtub sorted out, cash flow, helps you sleep at night. If you've got any questions, put them down below. Subscribe below. There's some free resources and things you can get down below. Would love your feedback. Hope this helps.